Hello ladies and gentlemen, welcome back to Dre's YouTube channel. Today we'll be continuing our What is Investing series where we'll be taking a dive into stocks. What you can expect in today's video: first we will be talking about what are stocks. Next we will go over how to trade stocks. I will also share an example with you guys on, say, an Amazon investment. If you were to buy shares of Amazon, say a year ago, how much they will be worth today. And last but not least, we'll be talking about advantages and disadvantages of investing in stocks. What are stocks? In simple terms, stocks are also known as equities or shares. It's simply an investment or security that gives you a small piece of ownership of a company. By purchasing a stock, you are entitled to the company's earnings and their assets. Therefore, when the value of the organization goes up or down, the value of your stock will also increase or decrease. When it comes to stocks, there are three main types of stocks. You have common stock, preferred stock, and American Depository Receipts, which is also known as ADRs. In short, how you can identify these different stocks. When it comes to common stock, just look at it as a basic stock. Nothing special to it. This could be a growth stock, a smaller company that you're expecting to grow bigger and bigger over the years. Also, this could be a penny stock, which is a very small company, which are considered to be very risky investments, but just look at it as a regular stock. Next, we have preferred stock. You could look at preferred stock like dividend stocks. These are stocks where companies are paying you money for investing in their company. So as they have their earnings and their profits come in, they typically share some of those profits with their investors by paying you dividends. All right, and last but not least is the American Depository Receipts, which are also known as just the foreign stocks. These are companies that reside in a foreign country. However, we do, depending on which brokerage you trade with, you will have access to many of these companies to trade with, but they will come with small additional fees. How to trade stocks. First, we must understand that investors buy stocks for a number of different reasons. Some investors may buy stocks for the long game, to buy and hold to infinity and beyond. Some other investors may invest in stocks just to get a short-term profit. They're banking on short-term moves in the stock market, and some will invest in stocks to establish a passive income, and this is basically when you invest in dividend paying stocks. You can choose to invest in all of these different ways, but understand that each way comes with a different level of risk management and also understanding of fundamental and technical analysis. In order to trade stock, you must first open an account with a brokerage. This is an institution that provides financial services such as trade facilitation and financial planning. Some of the most popular name institutions are your Vanguard, your Charles Schwab, your Robinhood, your Fidelity. Each institution offers unique benefits like $0 to low account fees or $0 to low trading commissions on trades, from low to expert level trading resources, and more. Be sure to analyze what benefits will best fit your investing style and needs, whether you are a passive investor, an active investor, or a growing investor. You want to ensure that the brokerage that you decide to go with offers the resources that you will need in order for you to succeed. But also understand that you do not have to limit yourself to just one brokerage. Just like a bank account, you can have multiple different brokerages and have different trading styles and different trading strategies set up in different accounts. If you're enjoying this video, please do not forget to like and subscribe. It will greatly help this channel. Thank you. How to trade stocks. After deciding on your brokerage, it is now time to research the stocks that you want to buy. Soon we will be releasing videos on how to conduct your fundamental analysis and technical analysis. Right now we're just covering the broad basis of stocks. So overall, you want to choose the stocks you purchase based on one of three things. One is the stock a growth stock. Is this stock a value stock, or is this stock a dividend stock, or what I call a money tree? So growth stocks, these are companies that has a lot of potential to still grow. For example, Amazon, this is still a company that is at its innovative phase to where they're still coming out with new things. Google, for example, this is a company that right now they're expanding with their AI and stuff. So we're not going to talk too much about companies. However, growth stocks, these are companies that you are investing in because of their potential to still grow. Next, the value stocks. These are companies that you believe are currently undervalued. It could be due to the current market. For example, for the past year or since COVID, since the stock market has been getting beat up, a lot of mid-cap companies and fintech companies have been beat up pretty bad. However, or you would expect that whenever big money starts pouring into the market once again, these companies are going to take back off. They're going to grow once again. And then finally, the dividend stock, what I call my money trees. These are the companies that you invest in, once again, just because they are not just because, but these companies pay you to invest with them. A lot of the times when companies plateau or their growth isn't, they're not growing at such a rapid pace, instead of them having to spend their money to expand their company and to grow more, they are instead taking their profits and they're sharing them with their investors. All right. Once you understand your purpose for buying a stock, you can then establish a well thought out plan of execution, and most importantly, your plan of exit. Right now, I could tell you, hey, this stock is booming. This is the stock to invest your money in. However, if you don't know when to buy that stock, and also if you don't know when to sell that stock, you will find yourself being burnt. And the stock can go up, reach its peak, and it can flatten out just as quick, and you could just be left holding the bag, and you found yourself donating to the market, or what we call paying tuition. So, like all things, each stock has a season of seeing its highs and its lows. So don't find yourself buying and selling stocks at the wrong time. Another great quote from the GOAT investor, Mr. Warren Buffett himself: the stock market is a device to transfer money from the impatient to the patient. Do not find yourself rushing into a position just to throw your money away. All right, ladies and gentlemen, an example of how a stock investment will take place. We will use a 1-year example with the stock Amazon. So we're going to go to the Yahoo Finance. We'll click on this and we will type in Amazon. You could type in the ticker symbol AMZ, or you could just type out Amazon and it will still pop up for you. You just want to ensure that you're on the United States Amazon, not any of the foreign Amazons. So from right here, we have a chart of how Amazon has performed. We will click this 1-year tab so we can see how it's done in the past year. And so hypothetically, we will say that we purchased 10 shares of Amazon exactly 1 year ago from today, which that gives us 19 December of 2022. At that time, the Amazon stock was trading at $85.25 per share. And so if we bought 10 shares of Amazon on that day, we would have spent $852.50. So fast forward, let's say that we held those 10 shares all the way up until today, or the last trading day, that is, which would have been this previous Friday, the 22nd of December 2023. We see that Amazon is now trading at $153.42 per share. And so if we take my handy dandy calculator, and let's say last year the stock was $85.25, we're going to multiply this by 10. So last year we spent $852.50 on these Amazon shares. Now, when we sold them on Friday, hypothetically, let's do 153.42. Let's say we was lucky enough to sell it at the high. We sold those same 10 shares for $1,534.20. And so if I pull up my sticky note that I have here, you can see a breakdown. Let's see, we'll move right here, breakdown. So last year on the 19th of December, by purchasing 10 shares, we spent $852.50. Selling those same 10 shares this past Friday on the 22nd of December, we sold it for $1,534.20. That gives us a $681.70 profit. So from just a 1-year investment of $850, we made roughly an 80% return on our investment. What are some advantages to investing with stocks? Well, first, investing with stocks, you have the potential for higher long-term and short-term returns. There's no limit to how much return you can make on a stock. However, at the same time, you can lose your entire investment if you invest in the wrong companies. Another advantage that you have to investing with stocks is you get voting rights to the company that you own whole shares with. Also, investing with stocks, you can invest in dividend-paying companies, which can offer higher and fixed yields. Dividend-paying companies also normally experience less volatility compared to common stock. If you take the time to study fundamental and technical analysis, stock price movements can be predictable. Stocks also offer a wide range of diversification. You can invest in common stock, foreign stock, dividend-paying stocks, bonds through stocks, real estate through stocks, and also mutual funds. And last but not least, you can manually purchase individual stocks, or you can purchase groups of stocks known as ETFs or exchange traded funds to help lower risk and exposure while also diversifying your portfolio. What are some risks to investing with stocks? Well, first, if the company you invest with were to go bankrupt, you stand a high chance of losing your entire investment. Next, stocks can be extremely volatile depending on the type of company you invest with. If you invest in small cap companies, these are normally a lot more volatile, meaning a group of 5 people with a lot of money can make this stock go up and down very easily compared to a large cap company like Apple or Nvidia or Amazon. And also, if the company you invest with is profitable or non-profitable, that can also determine how volatile that company is. Another risk to investment with stock is that most common stock do not pay you dividend. If they do, it is often lower than what dividend stocks pay, and it is not guaranteed. Dividend stocks have lower long-term growth potential, if any. Next, investing with foreign companies have the risk of local currency affecting the value of your investment. And last but not least, political or economic events in a foreign company's home country could potentially harm your investment. For example, if you've been investing with any companies out of China in the past 2 years, all of Chinese companies have been taking a big hit in the stock market due to the economy. And so that is something to be aware of whenever you invest with foreign companies. All right, ladies and gentlemen, we have now completed episode 4 of Ways to Invest in our investing series. Next week, we will be dropping a video where we'll be going over funds. We'll be talking about money market funds, mutual funds, and index funds. I hope you all are enjoying this content. Please, if you have any questions, feel free to leave them down in the comments, and I will try my best to get back with you. Remember, I am just here to share some ingredients. It is up to you to create the recipe for your journey to financial freedom. Thank you all for tuning in with me today. Stay tuned for next week's video. Dre out.